All right, hello, and welcome to Camel Finance. I'm your boy Camel, and of course, yesterday was CPI day. I have already posted the data. I'm sure you've already seen the data. The forecast, the readout, it came in slightly hotter than forecast, certainly above where I was expecting. However, we are still trending down. We are still below the prior months, so that's something, right? Housing disinflation should be just around the corner, and likely some of the reason this forecast was hotter than expected was because of housing. But you can see here the Zillow index has been dropping like a stone. The Fed uses a lagging measure for shelter inflation, but it's only a matter of time before even this comes down and we see rapid disinflation. So this, in theory, should push the metric down, should push the CPI metric down in the coming future. But the big question is, how much do these CPI numbers even matter if the methodology to calculate it keeps changing? Imagine running an experiment and changing the way you calculate something halfway through just to get the result that you want and then publishing it. Absolute nonsense, right? It's ludicrous. But yeah, we all sort of, as traders, tend to hang off of this magic number as if it's the most important thing in the world. But it's of course completely fake. So it's a bit of a strange situation. The nice thing here, though, is there's another CPI report released the day before March FOMC. So we only have to look out a couple of weeks and then we get another one of these brilliant reports to hang off of. Do you remember I posted this when Michael Burry, the guy from The Big Short, said sell, and the day that Jim Cramer said we're in a bull market, buy the dip? And I said, I wonder if this should be the first time we listen to Cramer and ignore Burry, even though I've also said a bunch of times I don't really respect what this guy has to say. Well, it turns out I was kind of right in my apparently harsh judgment of him, because The Big Short, Michael Burry, bought a slew of stocks last quarter, including 2 Chinese internet names. So whilst he's telling everyone to sell, he's actually out there buying. So I do not respect that. I do not respect that at all. Bob Lucas here, the king of cycles, is still calling for one more drop in stocks into the weekly cycle low, and then he thinks we can go, and that's his preferred view for the S&P 500. He says structurally, the bear looks over. I certainly agree with the last sentence, but if I grab my pen here so I can doodle, I think we're probably going to see something more like this. So that, of course, remains to be seen. This, of course, here would form the weekly cycle low instead of forming down here. But, of course, I'm open to all outcomes. We'll get to the charts in just a bit. But the S&P has just closed above its 1-year MA. And whenever it's done this historically, as you can see, all of these red circles that coincide with these, the market has looked constructive 1, 3, 6, and 12 months later for the S&P 500, the Nasdaq Composite, and the Russell 2K in 100% of occurrences. This tells us to keep an open mind about better than expected outcomes in the stock market over the coming months. Over in the world of Bitcoin, the UK regulators have said that Bitcoin's ATM operators are currently illegal because that none of them are registered. So I wonder what will happen to these. That remains to be seen. But the whales don't care, and they continue to load up, as you can see here by this yellowy orange line. El Salvador is opening the world's second Bitcoin embassy in Austin, Texas. Again, it continues to fit with this theme that I continue to show on this channel, and that is that America, Russia, and China are all seemingly competing for hash rate and Bitcoin dominance on the global stage. We are truly watching game theory play out in front of us. Robert Kiyosaki, the author of Rich Dad Poor Dad, has said the Fed is going to be forced to print billions in fake money by 2025. He says Bitcoin will be at 500k by then. Remember, this is something that I have been calling for as well. If I go to my melt up chart and scroll over, you can see here, market will finally bottom. This is a temporary bottom when the Fed launches a record QE of 10 to 20 trillion. So expect that. But first, I think we got this melt up thing to play out. So that remains to be seen, of course, as ever, one day at a time. Taking a look at the dollar is still consolidating. So is this a bull flag that's going to resolve to the upside, targeting 105 and potentially as high as 108? Or is this thing about to break down and roll over? That, of course, remains to be seen. So far, we've got this squeezing situation going on. So we'll see how this resolves over the coming days. Gold and silver continue to punish the laggards that showed up late. Remember, we did really well live on this channel capturing the bulk of this move right here. And once we got into this neighborhood, remember, I was saying that with all these influencers and the mainstream media calling for 3K gold, I said, I know what happens next. Those people, those laggards have to be punished. And that appears to be what we're doing. So I believe these people are going to continue to get punished. We're going to continue to move down over the coming, say, week, 2, 3 weeks even. And then I think we'll have an opportunity to buy this dip. So I think I've drawn in yellow here. This is way too volatile. I think we'll end up moving this trend line and it will probably look something a bit more like this, maybe a bit wider. We'll see how it goes. But for now, the way to trade this gold, in my opinion, is to sit on the sidelines and wait for a nice entry. But then once all the people that showed up late to the party and were calling for 3K gold in here, all of those people are going to give up somewhere in this neighborhood. And when they do, that will be the time to get long again and target the top of this range up here around 20.50. So patience separates the high level traders from the retail. Hopping into silver is the same sort of deal. You can see I said all along that we were likely going to run these stops down here. So I think we're pretty close to a bounce, but we want to probably come down and take out the stop losses down here at least first. Again, in here, you were hearing everyone saying they were adding silver on social media and the mainstream media was covering it. But this is just not how markets work. The high level traders, they get concerned when they see that up here. And now we're sat on the side waiting for a nice entry, which of course will show up. But patience is the strongest and most important tool that a swing trader should have. Equity markets continue to look encouraging. I just wanted to point out that a lot of people, I heard terms yesterday like, oh, it just nuked, it just reversed, it just plunged, it just crashed. What chart are you looking at? You must be looking at 5-minute candles to come to this conclusion. When I look at using only the daily chart, things continue to look constructive. Here's the UKX, still above this red upward sloping support line. So nothing else to say, but apart from long and strong continue to push, targeting around 8,500. If we go to the S&P 500, again, I don't know what chart you're looking at to say that it's crashing, it's turbo reversing, or all of these terms that people use. What are you looking at that I'm not? Because all I see is an uptrend established. I see higher highs and higher lows. And until that changes, then I can't stop being long. I can't stop pushing my longs. It looks like we're trying to break out of this sort of bull flag situation we've got going on. Doesn't mean we couldn't come down and retest this red upward sloping support line. Doesn't mean we couldn't come down and test this blue, again, this big blue 2022 bear market trend line. Doesn't mean we couldn't do that either. But for now, long and strong continue to push, and I expect this to continue to resolve to the upside. If I hop into the NASDAQ, it's this almost the same deal, isn't it? We've still got this sort of bull flag situation. We're still making higher highs and higher lows. So if you're the sort of person that was saying things like, oh, look at the scam wicks, look at this, look at that yesterday. I mean, just zoom out a bit. This is perfectly healthy. This seems perfectly reasonable. And I think this is likely going to resolve to the upside. Even if it has to first resolve to the downside, I still think we ultimately are going to go higher. Dow Jones as well, massive bull flag, isn't it? Look, we've got this sort of squeezing here and potentially here, looking to add a position above this red line right here, as I've been saying over and over again. So still pushing the current long, still expecting this to resolve higher, and I will add this and move this original stop loss up to about here once that happens. So for now, I don't know what everyone's looking at. They're so concerned and panicked about. This all looks quite healthy. And if you hop into the VIX, I mean, look at the VIX. Now, this could well be breakout retest, looking for a resumption higher as the stock market plunges. But it just hasn't done that yet, and it seems to me that it's more likely to resolve to the downside and make new lows. So, again, I'm open to anything. I'm open to being wrong. I'm open to switching stances. But do I feel like this is going to be a profitable VIX hedge for me? No, I think it's going to get stopped out. And I think the reason it's going to get stopped out is because the equities are going to rally. Tesla looking nice and strong, as you can see. So again, nothing more to say apart from long and strong continue to push. Apple, same sort of situation, although no position from me. I have to talk about Geo. Something changed with Geo, so I'll show you that. I got stopped yesterday. I've been saying over and over again on this channel that I had moved this initial stop up to here, and I was looking for a breakout above this blue box, which it almost looked like it was going to do here. And then I think some bad news came out. I don't know. I don't pay attention to the news, but the charts tell me everything I need to know. As you can see, my stop here was taken out. So I walked away with something like a 16% gain on Geo. So I'm more than happy with that. And it's a bit disappointing that we couldn't break out, because I thought this was going to end up being a very high performing stock. It doesn't mean that if the price can't recover back inside this box and then break out, that's a new trade and that will be valid. But for now, no position from me from Geo. Walked away with 16% profit. And that is nothing to complain about, to be honest. XLC, still maybe thinking about adding a position here if it can break out, but it hasn't done that yet. So that remains to be seen, but no position for me as I de-risk from this going into CPI. Bitcoin looks to be doing what I thought it might, which was probably get a bounce out of CPI and then drop into this cycle low and go. If it's not going to do that, then maybe this is just going to continue to grind down into that cycle low at the end of the month and go. Either way, that becomes a buying opportunity from me. I will be adding, I'll be moving stops up and looking to target 30k over the next 60-day cycle. Exactly the same is true of Ethereum. XRP, I wasn't paying attention. I've got stopped out, as you can see here. So as per usual, if I get stopped out, I'll show you every one of my wins, every one of my losses, all mistakes. So XRP stopped out, back to neutral. I'm going to leave this here. at the side, because if we get back above this red line, then I'll re-enter a long for XRP. But for now, that one stopped out, and I definitely should have been paying more attention over the past few days, but I just kind of slept on this and then I got stopped out. I could have cut this early because once we didn't confirm a breakout above the red line, there was no real reason to hold the trade. But I slept on this. I paid my stop, is what it is. And MATIC, as you can see here, MATIC continues to push up, so we'll see what happens with MATIC. For now, long and strong continue to push. Zcash still doing a whole lot of nothing. Long and strong continue to push. Blockchain stocks looked a little bit encouraging. Is this like a bounce that we're going to get from Coinbase? Are we going to do the same thing from MicroStrategy, as you can see here? Quite possibly, but I would think these are likely going to trace Bitcoin, as they always do. Here's Riot. And here's Marathon as well. So I would think possibly this has got to come down a little bit more in each of these into that 60-day cycle low due at the end of the month. And then from there, I think we can add exposure. I think we can move stops up and look to ride the next 60-day cycle as per Bitcoin. So overall, pretty constructive looks as far as I can tell. Things can change and they can change quickly, but they haven't changed yet. I remain long risk. I remain looking to add exposure rather than take it off. Waiting for cycle lows for the crypto market to add my exposure, waiting for breakouts in the equity markets to add exposure and move stops up. I think a lot more patience is required for the precious metals, but again, that's okay. Remember, 80% of markets are only tradable 20% of the time. In swing trading, it's fine to just sit there on the sideline and be patient. There's no need to chase every move, no need to chase every swing. I mean, if that's your strategy, you do you. But for me, we made good money on the metals. We'll wait patiently and we'll make good money again. Make sure you drop a like on the video if you found value here today. Make sure you hit that subscribe button if you want to continue to get updates on all my trades in real time as a pro swing trader. If you have anything to say, throw it down in the comments. And until tomorrow, I'm your boy Camel. Take care from me. All the best. Cheers. Bye.